So let's ask Brian McNamara about why this new era is finally the dawn for both Glaxo and Haleon. Because, Brian, it's been a really tough 20 years, which precedes you and Emma in the management teams of these companies.
Yeah, listen, first of all, great to be here today, and great to be at the London Stock Exchange on day one of trading of Haleon. And listen, we're excited, and I'm super excited about the future for this business. As you're probably aware, this business was created with the two largest transactions in the industry in the last 7 years with Novartis and Pfizer joint ventures. And the outcome was an amazing business, 100% focused on consumer health with category-leading brands and great brands like Sensodyne and Voltaren and Night Nurse, and brands that are in households all over the world.
What is it about this company that deserves a higher valuation than Unilever was prepared to offer for it, Brian?
Well, listen, I think ultimately the market's going to decide what the value of the company is, certainly on day one of trading and for the long term. And I just fundamentally believe with the business we have and the commitments we've made, 4 to 6% annual sales growth, moderate margin expansion, strong cash flow business. We'll be able to pay down our debt leverage quite quickly. This is a business that will create value for shareholders for the short, long, and medium term.
So just let me get something straight. We know there's a lockup on the ability of the parent companies to sell before November as well. Is it your understanding that until the valuation of the company is significantly over £50 billion sterling, that there will not be any selling down from those major shareholders, the parent companies?
Well, listen, I think ultimately Pfizer and GSK, as shareholders of the company, will decide at what time they want to sell down on the business. And listen, in the end, the 50 billion number was a number that would have had a takeover premium in it. It also doesn't include the debt that we will now have as a business. So I think the focus for me is really on delivering the promise of this business, these great brands, great portfolio, delivering on our commitments. The value will be there.
Brian, I was just making comments about the listing window that you are facing today, that all the volatility we've witnessed on stock markets. It is just not an easy time to come to market. A lot of investors, a lot of companies have decided now is not the right time for their business. And just talk about how volatile a period it is. You've already made some warnings about the share price volatility and what you may see until it finds its footing from here. But just talk about the backdrop that you're coming to market in. Why now?
Well, I think a couple things. We are not an IPO. We are a demerge. So GSK shareholders, for every share of GSK they have, they'll get one share of Haleon. So that's a bit of a different way to come to market than, let's say, an IPO. And listen, this is a great business. We're in healthcare, and health really matters. So it is a bit of a volatile environment with inflation and other things that are happening in the world. But I feel like we're uniquely positioned in categories that really matter, with great brands to do well in any environment. So feel good about the business and feel great about listing it today.
I wonder whether some of the pandemic trends are still fading from the product portfolio. As we talk about pain relief and certain sensitive teeth products, I wonder whether we've seen the best of it, at least short term. Can you comment on that?
Yeah, listen, we definitely saw some volatility over the last few years with quarter by quarter, depending on consumer behavior. But overall, we see a real shift in consumers on how they think about their everyday health, how they think about proactively managing their health. So we feel like the portfolio we have and the business we have are positioned really well for the short term, medium, and long term to deliver on those needs. So what we've seen from a pandemic perspective and consumer behavior perspective has really continued on, and we expect to continue on into the future.
Brian, one of the concerns that some market participants have, at least short term, is the amount of debt. And you mentioned about the efforts to try to paying that down quickly. But there are fears that, at least short term, that may constrain you when it comes to paying out dividends, the sort of cash returns that investors are looking for, particularly in this type of market environment, those safe returns. What's the outlook here in terms of trying to pay dividends quickly to investors?
So a couple things. On the 4 times leverage, we've made a commitment that we'll get that below 3 times by the end of 2024. And this is a high cash flow business and a strong cash flow business. So it's not unreasonable to have that level of debt, given that we've done two of the largest transactions in the industry in the last 7 years. As far as dividends, we said we'd be the low end of a 30 to 50% dividend cover, which was announced in 2018. So I feel good about where we're at and our ability to pay down the debt and also provide dividends to our shareholders.
Brian, this is a battle for you, as you well know from your experience at all kinds of places. I think wherever you've been, you were at Novartis for a long time, you were at P&G as well. This is about getting your net valuation to the peers. And perhaps in the US parts of your roadshow, I know you've had an enormous investor roadshow as well. The greatest names in the industry at the moment trade on about 24, 25 times forward. You know this very well. The Colgate-Palmolives, the Proctors of this world. But Glaxo itself traded on 13 times forward as well. But the lowest in this in Europe trades, I guess, the likes of Unilever on 17 times forward. Do you think you can get the valuation of Haleon anywhere near the best in the business, who at the moment appear to be stateside?
Yeah, so listen, I believe this is a great business, and again, great portfolio, category-leading brand. So as a result, I think we deliver on those commitments. The market will obviously decide what the value of this business is, but I feel really good about the prospects looking forward, because I feel like this is a business with good growth in categories that matter, and we can make a real difference in the world.
Brian, what happens if there is a takeover approach? I mean, there's already been the points been made that Unilever and the bid came at a much higher price early in the year than where the stock's likely to be trading from day one. Would you fend off any bid approach, or would you engage?
Well, listen, I think the board of Haleon would engage in any potential approach. I mean, it's our fiduciary responsibility. Not my focus, to be clear. My focus is really on listing this company today and focusing on delivering on those commitments, again, which we feel really good about, and realizing the full potential of this great business that we've built over the last 7 years.
Stakeholder value or shareholder value? You, more than anyone, I'd imagine, or certainly as much as anyone, has spent time poring over what Emmanuel Faber got completely wrong over at Danone. You would have looked at the criticism and indeed the adulation going Paul Polman's way, the former boss over at Unilever as well. Where do you sit in this conundrum as well, Brian? Because there's a lot of people out there who just want the hard dollars as well. They want it to be shareholder value. Are you going to be a beacon of light for the environmental lobby?
Listen, first of all, the business that we're in with is everyday health. We have a very clear purpose to deliver better everyday health with humanity. And all our brands have brand purposes that are about everyday health and helping people around the world. Environmentally, we have a lower environmental footprint than many of our peers, just given the categories we're in. The amount of commodities and commodity-related products that sit in our business, the amount of energy we use to create our products. So for me, the ESG agenda and the growth agenda are very well linked. But I think fundamentally, we're focused on delivering on the commitments we made, and that includes environmental commitments that we feel really good about.
But if you had to choose at the end of the day, and I noticed that a lot of CEOs, their ESG and environmental aspirations have fallen quite aggressively, as indeed it has for a lot of voters. What's more important to you, ESG or shareholder value?
Well, I think these are hard jobs. You need to do both, and that's our focus. And I think given the business that we're in, I believe the two are very, very linked, and we need to, and we will. Focus on making sure we're the right kind of corporate citizen, but also we deliver on our growth aspirations and our financial commitments we've made to the market.
Brian, do you want to just give us a little bit of colour around the name Haleon? I gather it means in good health and strength. Was there a bit of workshopping behind the scenes to come up with the name?
Yeah, so you can imagine when you are creating a brand new name, you have quite a bit of work to do to make sure it translates everywhere around the world, that there's no IP issues with it. We feel great that we ended up with Haleon, and you're right, Haleon is in good health. Hale means in good health, and Leon means strength. So we feel like it's a really nice way to articulate this new company that we've created.
Let's hope it's a metaphor for the stock too. Brian, good luck with today, and we'll watch the fortunes of the company closely. We look forward to speaking to you down the track.